Let's bring in Barton Crockett, Rosenblatt Securities senior research analyst, and get his take on sort of what it all means. And Barton, you know, they're thinking about it. Doesn't mean they're going to do it. But when something's for sale in your industry, you do certainly give it at least some thought. And that is the case at Warner Brothers Discovery. What's your take on whether they should or shouldn't pull the trigger on a deal like this?
Well, look, I mean, we've had caution about the TV media stocks, and we've got a sell rating on Paramount, a sell rating on Warner Brothers Discovery, really tied to the secular pressures. Certainly, you know, I do think that if Paramount were to move ahead with a merger scenario, Warner Brothers Discovery is probably their best fit. You know, and part of that is regulatory, right? So all the other big media conglomerates have broadcast networks where they couldn't combine that with Paramount, and Warner Brothers Discovery doesn't. But that also means that Warner Brothers Discovery could make a nice match for many others. So it's not entirely clear that this is their best option. What is clear is that there could be a lot of cost cutting. It is clear that there could be some antitrust questions, but I think the shares would be enough that this would stand an argument of being able to go through. But I think the bigger question is, does this really change the revenue trajectory? And I think that's what the stocks will trade on. And what you would be getting is basically a doubling down of exposure to secular pressures in the pay TV network without a clear answer for how you turn that around.
Right. I mean, linear cable networks, you get more of them. It's not where you want to be, although, of course, it does contribute the bulk, the vast majority of Warner Brothers Discovery's cash flow right now. That said, you know, it could supercharge Max. They're about to take that internationally. And to your point, it could be, billions in synergies. That's got to get Warner Brothers Discovery's attention, doesn't it?
Oh, certainly. I mean, I think that this is Zaslav's wheelhouse, and they've done really well with cost cutting at the combination of Warner Brothers and Discovery. You know, certainly I think all the efforts that they've done there and all the efforts that Paramount has done to kind of bring its cost structure under control probably lessen the opportunity for cost cuts in a combination of the two, but they'd still be meaningful. But this is a market, I think, that wants to see a growth opportunity, wants to see a horizon that is brighter than today, not just cost cutting. So I think there needs to be a revenue argument, and I don't know that you see that in this kind of combination.
Yeah. You know, going into next year, Barton, overall, I mean, I've made this point and others have, and I assume you agree. There does need to be some rationalization here, right? You've got too many streamers spending too much money for not enough return. So what do you think happens? What is the most likely outcome in terms of how that changes?
No, I think that media M&A is certainly going to happen. That doesn't mean it delivers the kind of upside that maybe it has in the past to shareholders. You know, and maybe some instances it's better return than others. We like a much smaller company, Lionsgate, on that theme, which is breaking itself up, I think, as a very valuable content studio and a Starz network, which is really, you know, pretty immaterial to the argument in a market where I think there still is a bid underneath content libraries, unencumbered by the kind of basic cable networks that are a big albatross, we think, at Warner Brothers and at Paramount. You know, so here and there, you know, in a special situation, I think the Liberty Sirius XM merger should deliver value to Liberty. The Atlanta Braves are a sports team that could be acquired as a separate stock. And so there's M&A value, but that doesn't mean you have to go down combining TV networks as the way to go after that.